Logan Paul has announced his intention to move to Puerto Rico. There's speculation that that move could save up to $10 million per year. Is that too good to be true? I'll give you my perspective on this episode of Taking Shelter. I'm your host, Peter Paulson. First off, if you want to know more about the Puerto Rican tax incentives, watch the other videos on this channel. But for purposes of this video, I'm going to dive right in. I'm making this video because I feel like some of the estimations of the potential tax benefits of the move are overstated. I've seen people suggesting a total benefit of 50%, which is the combined federal and state tax rate, 50% times an estimated income, annual income of $20 million. Now, I feel that this is tax hyperbole, this overstatement or inadvertent overstatement, that I feel like should be balanced out with a perspective that is a bit more technical and a bit more practical. So I made an estimate, I ran a number of scenarios, I did some game theory, and I came up with a range of what I consider to be a set of possible tax outcomes. And I'll share that range with you. And then I'll talk about 5 key variables that I took into consideration in setting up the range. So let's talk about the range. Based on my analysis, which is inherently speculative because he hasn't moved or announced any details of the move, I believe that the entire tax benefit will be somewhere between $0 and $5 million. So let me talk about what factors or variables I took into consideration in making this range of estimates. And those are 5. Number 1, how long will the overall period of residency last from start to finish? Number 2, how many days will be spent on the island each year? Number 3, how much of his business empire will he move to the island to be eligible for the benefits? Number 4, how will his investments perform during the period he's on the island? And 5, how will he view the impact, the longer term impacts on his brand? So let's talk about each one of these. Number 1, how long will the period of residency last? Based on my perspective, living overseas, the first 6 months goes by in a flash, very quickly. But thereafter, there's a bit of FOMO that creeps in, some missing people and things back in the United States that you've gotten used to. Now, maybe in the case of Puerto Rico, you're not that far away. You can come back for some period of time during the year, and it's not as significant. But if it was me and I was going to make, or before I made the commitment, I would want to understand what are the possible exit ramps. And the shortest, in a sense, the express ramp that I would consider would be a minimum period of 2 consecutive calendar years. So in other words, I would move in 2021. I would expect to be resident in Puerto Rico for 2022 and 2023, and I would come back to the United States at the end of this adventure no earlier than 2024. If I did that, I might not get any benefits in the year of the move, 2021, but at the same time, I would have a long period of time, well over a year, before I had to decide whether it was right for me and whether I was going to claim U.S. tax benefits or not. Beyond that, if I did want to get some year of move tax benefits, then I would be considering a duration of 3 or 4 years or more in order to qualify for those first year benefits. And I recognize there are cases where you go to the island for the tax benefits and you fall in love with it and you stay indefinitely. And if that's the case here, then I've significantly understated the potential benefits. The second variable I considered is how many days per year will be spent on the island. And the conventional wisdom is 183 days or more in a year. But the more days you spend on the island, the more island source income you can have and the bigger the benefit can be. On top of that, if you don't qualify for the bona fide resident status, then not only do you not get any benefits personally, but your Act 20 company benefits can go away as well, and you would have to pay or could have to pay tax on the income of the Act 20 on a current basis. So the third variable is how much of the business empire will be moved to Puerto Rico. The benefits of moving to Puerto Rico are not all or nothing. It's not a switch that you flip on and the day after you move, you forget about U.S. taxation. U.S. tax law in this area is like an iceberg. Above the waterline, there are two main rules. One of which is you have to be a bona fide resident of Puerto Rico. The second is that you can only exempt Puerto Rican source or island source income. Below the waterline, there are a lot of additional rules and guardrails that can significantly impact the overall benefit that can be received from moving to Puerto Rico. Now, I don't know how Logan Paul's business empire is structured, but just by way of example, there are three possible complications for somebody like him in his situation. The first is that he's a celebrity and he's got a celebrity brand, and that's something in the tax vernacular called personal goodwill. And transferring personal goodwill to a Act 20 company can be tricky. So you may, for example, have to enter into a non-compete agreement with your own Act 20 company. And even then, depending on the characterization of the company, you could end up with a deemed royalty, and some of that royalty may not qualify for the U.S. tax exemption. So that's one complication. The second complication has to do with events and appearances. As a celebrity and an athlete, there are certain times where you need to be someplace specific at some time specific, and those places or could be in the United States. And that could create some U.S. source income that is not eligible for the exemption, or if it's received by the Act 20 company, it could create a U.S. tax exposure for that Act 20 company and very much disturb the overall benefits that are available. The third example is merch. If you have apparel or Logan Paul Monopoly or some other merchandise, obtaining tax benefits via the sale of that product or licensing of that product can be problematic where there are U.S. customers involved, and there are likely to be a lot of U.S. customers involved. So some of these problems can be reduced or alleviated by treating the Act 20 company as a flow-through entity for U.S. tax purposes by making a formal election. But if you do that, you might dilute the benefit by ending up with more U.S. source or non-island source income. After analyzing all of these complications, the point I want to make is that someone in this position might decide it's best to leave back a significant part of the empire and continue to have that part taxed for federal and state income tax purposes. So the fourth variable is pretty obvious. It's a question of how the investments will perform during the period of residency. So what will be the value of Bitcoin or holographic Charizard cards over the period of residency the next several years? I've seen a video where somebody went to Puerto Rico, moved to Puerto Rico in 2018 with Bitcoin, and they got absolutely wrecked. And I hope they bounce back and they're doing better now, but clearly at that point in time they said, I wish I hadn't have done this. So you just don't know how capital assets are going to perform. And I've taken that into consideration. And also, it's important to remember that there's a special rule that says appreciation of assets that exists or accrues prior to this possessions holding period date is not eligible for the U.S. tax benefits. So finally, variable number 5, how will he view the long-term impact on his brand? If you go back and watch the video on his channel where he talks about moving to Puerto Rico, they spend a fair amount of time talking about how, in a sense, perfect things are, how everything's kind of come together, the stars and the moons have aligned. And when he moves everything to Puerto Rico, he, in a sense, has to kind of break down that existing structure and reform it in a way that he hopes it all comes back together. He hopes it all comes back together in a better way. And But in my view, he's just not going to let the tax tail wag the dog for too long if he feels like there's a negative brand impact. And we'll call that financial FOMO, that there is a greater opportunity available if he were to remain or go back to the United States. And the big question is, how will the move impact his subscribers, affiliate marketing fees, event fees? I will definitely be tuned in to feed my obsession. In closing, there are many factors involved, and much of the outcome depends on behavior, and thus it's hard to predict with any accuracy. I hope you found my perspective illuminating and entertaining. This has been Taking Shelter. I'm your host, Peter Paulson.